Okay, we are live and look at this trade that we took. This is our second entry on this trade and we called this morning. I literally called this entire trade this morning and
Order filled.
we're literally finna close out our position here.
Order filled.
Big ups on today, man. Beautiful day today. We called this to the T here on this trade. And the reason why I'm going live with you all is because this is something that we didn't really truly discuss prior to this morning. Prior to this morning. But we call this to the T. If you was a part of this morning's live stream, you would have saw this. And look, we exited right at the perfect time. Right at the perfect time. Those of you who know, like, how we really get down, we called this morning, and this trade has literally just come back into play. We just closed the trade out on live, right? And here's how this went. We're gonna go over this in a second here. We're gonna go over this in a second here. Just give me a chance to get ready for you all. 1 second, please. 1 second. But we was able to call this out to the T this morning, man. That's what I'm really happy about. We made so much money today on this trade, y'all. It is insane of how much money we made on this trade. I should have came back on PM session with you all to trade this with you all. I should have. The reason that I didn't was because I had some other stuff to do that had me a little bit like really too busy to be able to stream. So this is what happened, right? Those of you who was with me this morning and who tuned in this morning, we had a higher time frame bias, right? With the play of what we call for today. Look, I didn't even touch this at all from this morning when we said this was what we wanted, right? I didn't even touch this. This is what I talked about. I said we have full displacement, right? AM session, full displacement, and we had the reversal back to the upside, which is here, full displacement. This is, look, I want us to pay attention to this area and this zone here. I'll just highlight it for us. But this here, this is what we're talking about on this moment. Here, let's change the color. All right, so we'll roll with this. All right, this is what we're talking about from this morning, right? So this morning, market opens 9:30 a.m. candle. We're on the 15-minute chart, by the way. 9:30 a.m. candle opens. Boom. We sit on our hands. We wait. Our initial bias was where we were caught in the manipulation of going for longs, right? That was our initial bias. He said, I'm holding out. Nah, if you literally just rewind it a little bit, you'll see me closing the trade. I just literally closed the trade like just now. No lie. But this what happened. It came in very fast. Like right when we ended stream, the trade literally hit the minute we closed stream. We closed at 11 o'clock, right? Look at this 11 o'clock candle. When this 11 o'clock candle came, boom, I was sitting here still and I was like, man, I gotta take this. And I just went on ahead and just entered into the trade and rolled it all the way down to what we talked about this morning. That level of 29, 535, 75, 534, 75. I literally rolled it all the way down to there. And I was like, okay, I have to go ahead and take this. So my initial thing was to be able to go back live when I added to my position so that I would have been able to get into the trade as well. And that was here. When I re-added to my position here on this sense of retracement here, I re-added to my position and boom, just took it all the way down to final TP. I was like, okay, we called this to the T this morning with no hesitation. Like we literally called this to the T this morning. And so here's what I wanted to show us of how we were able to pull that off. It's important to start understanding like these displacements, because these displacements can sometimes draw the whole true narrative as to what's going to happen. Especially when we have that breaking structure, right? Like we broke consequent encroachment here, which we had a change of character. And this is why we was able to ride this all the way down. Here's the reason though for this. Like I want to go back to the 15-minute and we pay attention to the 15-minute of what was highlighted here on the 15-minute. So on the 15-minute, right, we have strong displacement at 9:30 a.m. on this candle. We tried to catch this small manipulated move here back into the fair value gap. And what we started saying on live was that, hey, it's respecting this fair value gap. It's respecting it to the T to where it is creating buy side liquidity, right? Like it's creating buy side liquidity that is here. So if we drop to like a 5-minute chart, look at this on the 5-minute. When you start paying attention to this area right here, look at how it respected this gap. It respected it to the T. So when stuff is respecting like that, we had to be patient. And we sat and we was very patient. But once 11 o'clock come, usually, and this is just me being honest, I do not know what happened on today. But when we start talking about time frames and the importance of time frames, the reason why we choose to trade and why we don't trade during certain time frames is because of this reason here. You don't have volume like you need once you enter into lunch session. You don't have that volume. But here's the trick of what happened this morning. Look at this 11 o'clock candle right here that came in at 11 and 11:05. 11:05. Soon we ended the stream. We caught serious volume. And I was like, you know what? That's what we were looking for during our streaming session. We was looking for this volume here to come in. This volume did not come in until I literally hit the end of stream. And I was like, oh, darn. Here we go. 190 point drop. Yeah, I made over 9K today. 9K. We traded those legacies, 250K accounts. 3 of them. So that was insane. Once price tapped into this fair value gap and it just respected this, I said before stream though, I said, hey, if you have balls of steel, before we ended the stream, you could go back and replay this. I said, here's the trade setup here. So I kind of called it out, right? But I didn't take the trade on live, but I was like, hey, this is the setup. If you have balls of steel, you could go ahead. Here's where your stop should be. Right? We said where our stop should be and what we wanted to see, and it just played itself out to the T, coming right here into this liquidity pool where we just took profits here. And so I wanted to talk about, man, we killed it on today. Like we've been killing it. Like the consistency for us trading, if you go back and just look at our trades of what we took, boom, 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 boom. Like 186, you talk about a win rate. You talk about win rate and win percentage. Like the proof is in the pudding. Since you've been following me on stream, there hasn't been a losing day yet. Like we'll knock on wood on that, but it hasn't been a losing day yet for us. We had a break-even day, but nothing of where it's been like really bad. I think everything of what we've been seeing in the story and bias of what's being told has played itself out. But here's what I wanted to talk about earlier on. We're going to go back to understanding these fair value gap zones, and I'm going to go over this one more time for us, because in doing so, this helps give us a better understanding and idea as to what we want to be looking for when we trade these, when we identify inefficiencies in the market, right? It's very important. Very important that we look at these from the T. Hold on 1 second, y'all. Okay. So when we was talking about fair value gaps and how they come into play, right? Uh we want to understand the fair value gap zone and understanding the importance of these zones and how we can use these in our trading. You're going to find a lot of people who do not know how to trade our concept tell you that trying to trade fair value gaps is trash, but to me trying to trade supply and demand is what's garbage. Not having a higher time frame bias along with what you're seeing once you scale down into lower time frames, of course you won't know if the fair value gap is good for you to use or not. So to determine that, you have to understand, are we in a discount zone or if we are in a premium zone? And today we were in a premium trading down into discount, right? So when you talk about today, us being up here, being in that premium for today, we traded down into a discount zone here on the 15-minute. If you look at this from a 1 hour, we're in a premium here. We trade down to a discount here. So if you go to the 4 hour and you look at it on the 4 hour, same thing. 4 hour was in a premium, right? Our 4 hour, we're in a premium. Hold on, guys. I keep getting some messages. Okay. So we were in a premium, traded down to a discount. And on the 4 hour, if you just look at what were we looking at today when we kept flipping back from the 4 hour chart, like we were really trying to see. I'm fully bought into ITC. I haven't lost yet since learning from you. That's what's up, man. So we want to pay attention to us being in these zones in the wicks of what we have here, right? Like I said, that it's very important to understand these wicks because they tell a story here, especially when we open high, close low, open low, close high, right? So we've been doing that a lot, right? Being stuck into this zone here. So on our daily chart, let's just go to the daily. This morning, this is what we was looking for this morning and what we was talking about. We said we were trading sideways. We did not like this, and we needed to either. Hold on 1 second, guys. Okay, important calls coming in right now. Trying to get stuff taken care of. All right, so you can see we traded in this range here on the daily. And this morning we said that, hey, we need to either have a break to the upside or we need to be breaking down in order to be able to determine like a true initial bias, right? Like us being able to fill this gap here is seem to be what we're about to take. So last night, all this goes back to last night, right? Of our initial bias on last night. On the 4-hour chart last night, this is what we were looking for. Let me go back to the 4-hour chart. On the 4-hour chart last night, this is what we were looking for. We were looking for, here's where we were last night, 6 o'clock p.m. Monday night, right? This candle here. This candle here. So what we were looking for last night was this. Either this move was going to happen to come back. It was going to be something like this, where we come here, do this, and do this to take out relative equal highs that we had up here, right? So we had a long bias on last night during Asia. That's why we took that trade of what we took last night on Asia, because of this candle here. So if I was to drop down to a lower time frame and go back to that time, that's where you got this move here, where we got this sweep, and we thought, hey, we're coming out here to take up previous day high, and then we could get continuation to take out these relative equal highs here. That's resting up here, right at 30,972, giving us a long, like a bias of us being able to take out previous week high, and we continue higher throughout the day and the night, right? Like that was the whole entire plan. So once we closed out on this trade last night, we see the market just consolidated for the rest of the night throughout London, and then it started breaking down during New York. Once it broke down during New York, at this point it was like, okay, where's the next draw on liquidity as we break down, and how would we get there? So when you talking to yourself before you get ready to trade, you have to ask yourself those questions, like what is happening? What is the story that's being told on higher time frames? What is the story that's what's being told also when I get ready to take my entry? Right? Like, is the setup going to present itself? And for us, sometimes it takes a little bit of patience. Like we literally sat for 2 hours on our hands doing nothing. Well, we did try to hop into a long once, but we sat on our hands and we waited for the setup to happen and take place. So when you have these gaps that start forming in the market, right, with that displacement, and we could go back and find another one, like here, the same thing happened here during this trade, right? You get strong displacement. Let's drop down to a lower time frame to be able to see it. Here you go. You get strong displacement to the downside here, right? Price comes back and taps right back into that gap. Here we got it drawn out here, but it's in like a little darker shade blue. I'm gonna change the color to like an orange. So right here, for right now, I'm gonna just remove this. So here's the same thing of what happened on the trade of what we took back on the 7th on Friday. This was a dub for us on Friday, right? So you get strong displacement. This is the high that sets in right? Right at 8:55. That was the high. And then you start seeing the market breaks itself down at 9 o'clock, right? And we're like, oh shoot, we hope the market doesn't leave us. At 9:30, what happens? That bullishness candle start to form, and it comes back to do what? Touch this fair value gap that it left back from 8:55 this morning, 9 o'clock that morning. Once it came back and it respected this fair value gap, once it respected this zone here, what happened? We entered into shorts and boom, took it down to the next level of liquidity. It's the same thing that we got here on Friday. The same thing came in for us on Tuesday. Let's go to Tuesday. Tuesday, price breaks down, rallies right back up at 9:30, 10:50, touches this fair value gap, and starts breaking down and hold itself strong all the way down to the next level of liquidity. It's almost like ice cream and cake, man. It's it's almost like ice cream and cake. And this is why it's so hard for people who claim that ICT concepts does not work, like trading ICT. Oh, it doesn't work. It's not da 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 da. It's because of, for one, this exposes your patience, your discipline, and are you able to tell true narratives in the market? And this is where we go from when we talked about this all the time. I don't trade based upon me guessing something is going to happen. A lot of you should know that by now, that I don't guess. I really go based on probabilities, and based on those probabilities, my confidence level is so strong within those that we take those trades and they play themselves out. Like, we knew, okay, we could get back if we trade back to midnight open. What are our odds for today? Today is Tuesday on MNQ. Today is Tuesday. Us having stats, like, what does our Tuesday stat says? When we're below midnight open, us being able to get back for loans is a what? 63% chance, right? So obviously our first initial trade was geared towards that, right? Today is Tuesday. We have a 63% chance of being able, we're below midnight open. We have a 63% chance of being able to trade back to midnight open. Maybe not above it, but back to, using that as a strong level for us. We also, if you got to go back and watch the video of where I talked about, like, we do not use midnight open as a key level. Like, it is not a key level. I don't want people to get it mixed up and not understanding New York midnight open, but we use it as a narrative throughout the day. And if you look at today, what happened? Right at midnight open, we were trading at, right? You could see where we were ranging at, consolidating around here. Here we could show it. Boom, right here. I'll highlight this and turn this blue for us so we could be able to actually see. So this here is where we were trading at this morning. You know, this is where I talked about with using midnight open. If you go back and watch my previous videos, you'll be able to see where I was going from 7 a.m. I highlight 7 a.m. to where we are going in at 9 o'clock. From 7 to 9, where are we? Okay, we're consolidating in this range. Soon the market open, it just dumped, right? 9 o'clock comes, 9:30 comes, we start dumping with a strong displacement candle. For me, at this point, it's like, okay, we're sweeping previous day low. Do we look for reversal here, right? in which we could have. Right down here, we could have had a small trade. Right here back into this fair value gap, right? So that don't mean that longs couldn't have been in place. It just wasn't the overall daily bias of what could play out for the intraday of today. So short term wise for a quick scout, yes, my narrative on taking longs was not a bad narrative at all, period. Where we start to determine what's going to happen for the overall day, once we caught the brick right here, right, and we start respecting this area in this fair value gap, that's where we started to determine, okay, for the rest of the day, here's what we can see happen for the rest of the day. We can trade up. I mean, we got displacement, strong displacement at 930. We get the retrace back into the fair value gap. And then now we're looking for distribution. That's what we were looking for. So if you take it, this goes back to what could be our power of three concept. Consolidation. Right? We break out of consolidation to get the manipulated move. There's your manipulation with the longs and then distribution. Understanding those concepts. So when you understand those narratives that play themselves out, then you're able to see it, and it's hard to unsee it. Like for me, it was so hard to unsee this that it was like soon 11 o'clock hit, I was in. It was too hard to unsee. And so if you continue to trade with me, you'll be able to see my reasons as to why I trade the way that I trade and what I look for. And I'm able to explain it to you in thorough detail so that it can make sense, right? Because when you can't explain something, how does it make sense to anybody? It doesn't. It doesn't make sense. So I don't know how people would say, oh, how do you trade supply and demand? Do you trade supply and demand on here? Like, what is supply and demand? I have no idea what that is. If someone were to tell me, or anything about ICC, indicator, inclination, whatever they call it. Like, I know nothing of that stuff at all, period. Like, once I learned these concepts, I was able to read the market to the T. And now that I'm able to read the market, it's like I now know where the bag is and I could go and get the bag. And I want you to learn and know where the bag is so that you could go and get the bag. That's why I was like, hey, it's important to go ahead and just choose to invest into yourself, right? Like I put this all together in the ebook so that you could be able to see this and learn this for yourself. And when you learn this for yourself, this information for yourself, you become more powerful in that sense because I took everything, put it all into one of everything of what we trade every single day, right? Is right there. That's a powerful tool, a $27 tool that can make you millions for your household and for your family, make you thousands of dollars for your household and for your family. That's insane. We go and waste that on stupid stuff, right? But taking something that is going to put money into your household, that's what I call an asset, not a liability. That's an asset right there because it's growing in value every single day. Because you're growing in value. You're learning, you're educating yourself. You're getting results, right? The results. The proof is in the pudding. The proof is there. Look, the exact from the entry all the way to the TP. Perfect. We even put it on our Twitter. Here's where I was on Twitter. This where I put it. Another thing, if I don't do anything on live, best believe that I post it on Twitter. There's the picture there where I posted it on Twitter. I tweeted it of us being in a trade on Twitter. I said playing out perfectly. And here's that area of what we were calling out. That 29,528. That's what I wanted. 29,528.50 was what I wanted. But I knew to go ahead, like once we start tapping into here, go ahead and close out the trade. Go ahead and close it out. So we seen this replay on Tuesday. We saw the replay again on Friday. Let's go back. Here's Friday. So when you see these happen in the market again and again and again and again and again, when you start seeing these happen like that, it makes it easier for you to be able to identify what you're seeing. You can identify quickly of what you're seeing and be able to react a whole lot better and be comfortable within your reaction when you see it, right? So one thing that you don't see, let's see this from, because we see it going to the downside, right? Let's see it on a reversal, like when we're trending to the upside, right? So here's the same thing of what happened again to the upside, where you could have targeted for longs in this like this is afternoon, right, up to 4 o'clock. So you get price breaking out here. Here's our 3 candle sequence here, which leaves a fair value gap. Boom, 3 candle sequence, boom, boom, boom. Price comes back, touches into this fair value gap zone, and then you could have entered into a, oh, here we go right here. But this is at the end of the day, right? So this being at the end of the day, you really truly would have only been able to get till 4 o'clock. That right there till 4 o'clock. You would have made money though. You would have caught that at the end of the day. Boom, would have made money, closed out right at the end of the market, and would have left. But you have to be able to identify these things in the market, right? Let me take this off because that's, we didn't trade that. So I'm not going to hold that up there. So now for the rest of the week, what are we looking for and what's going to be determining our bias for the rest of the week? Well, what we know is this. We already came and tapped into liquidity here, and we're getting that reaction off of that. So whatever the market decides to do after that, knowing that we tapped into this pool, I'm waiting to see that based on by this evening. Once Asia session happens, I think we consolidate during Asia, because this move was very, very much big this day. I think Asia kind of consolidates. I don't really see anything big happening within Asia. Maybe some continuation to the downside to come here to this level here at 29,461. This could be in play and can be in target here. So that's something to be able to look out for. Or this may play out for the rest of the day to come here. I think we just consolidate for the rest of the day and then probably get a break here, and then we start trading higher with a strong V-shaped recovery coming back to take out relative equal highs here at previous day high and continuing on to these equal highs that's over here. So when you look at the 4-hour and where we are, let's just remove that. If we look at where we are in the 4, we see our strong V-shaped recovery here. Price is starting to consolidate here in this channel. This kind of put me in the mind of this being like a channel like this, right? What we want to see is a break above taking out. I want to see something like this. We could come back and take out the rest of the liquidity that's here. I want to see us trade above this. This is for the rest of the week, by the way. I want to see us trade above this, come back, retest this area, right, as support. Once we retest this area as support, I want to see us come and start drawing higher to these relative equal highs. I want to see something like this for the rest of the week. That means that we're still bullish. And the only way I could determine that fully is by me paying attention to the DXY. When we were looking at the DXY this morning, look at what happened. Let's just draw this all the way, pull this all the way out. We talked about us losing support here. So if I go to the hour, here, let's remove this. Look at our trend line of what we had. So if we were to extend it out and you look at it, it started to try to hold support, rallied right back in, and then it's just breaking down, losing that support again, right? Which is looking like, hey, what was once support has now become resistance if we can't get back into this trend line on the dollar. If we can't get back into this on the dollar and we start retracing, coming back, breaking down lower, I honestly want to see stuff like gold make a move. Look at everything finishing bearish on today. Gold has not fully turned bearish on today, but I want to see gold being able to make that move. Look at that trade we had on gold last night. Beautiful. But I want to see stuff like this starts to do something like this, right? And all this is based off the dollar. We get this and we start breaking out like that. I want to see this play itself out. I don't want to see gold trade any lower than what it is. I think during tonight's session, you may find gold to be bullish. Yeah, you could find gold to be possibly bullish on tonight. So we want to look at higher time frame narrative along with understanding these gaps of what it leave behind, and is it in a position to fill those gaps already. Here's another key thing too. If we go back and we take a look at MNQ from last week, something that we was looking at last week, and I was like, man, this was pretty awesome how price came back, created that here, let me go here to go to regular trading hours, so you'll be able to see that gap that we had. I'll be able to find that gap. Here we go. So last week we had this happen here. This was like last week. Last week we had this happen. I don't know why the chat disconnected, y'all. But I don't know if the chat working or not. If you're trying to post in the chat. It was saying that the chat disconnected. I'm not sure if it's still disconnected or not. But okay. So last week, this is what we had happen here. Regular trading hour gap, right? So here's that gap that's here on MNQ. This is very important. We didn't get this gap this week. We didn't get nothing that was like this week at all, period. So when we got this gap here and the market opened up that Tuesday, right? When we started trading, we took that 5-minute orb strategy and we was able to trade to previous all the way to this high that's here. This was basically previous week high, I believe that's up here. Yeah. So that created the high for last week, right? So last week high, we traded into here. We was able to take a short off of the sweep of last week high, right? Now, this trade itself, and we're looking at this from a 5-minute chart, so there's going to be multiple fair value gaps throughout this. Multiple. I won't even be able to draw them all out, but here, let's try. I know it's one that's here. We have one. Because it did make it kind of hard for your entry, for people who were trying to get entry points. It did make it kind of hard. You had one here. Right, so here, you had one here. Here, and you had one here. And so what you notice is that, hey, why was it hard for a lot of people? And if you can just go back and just, I don't know. Oh, it's working for you? Okay, cool. I don't know if it's I just know that a few traders and people who be on my timeline, I had a lot of people talking about, man, price action was shitty. We did not get an entry, da 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 da. And then when you look back at it, it's like, okay, if you didn't catch it at the open, you missed entry 1, Entry 2, you did get this gap here, but this gap did not get filled, so that's invalid. You get a gap here, boom, it touches into this gap. You could have taken longs. Obviously you would have broke even on that trade because most people would have had their stop like probably right there and would have been scared of the turnaround here to be able to hold until these initial highs here. So if you didn't catch this move from the beginning, of course it would have been very difficult to get into this trade, and that was your last option came here like at around 2 something, right? 2:45 at the end of the day. That was like your last option. By the time 4 o'clock came, you would have broke even out the trade. So this move was kind of crazy. So a lot of people did not get an opportunity to trade this move at all, period, if they didn't catch it in the 5-minute opening range, right? Once we swept this high here, we knew that this gap is going to play an important role within the rest of our trading. An important role. Guess what? That new week opening gap has yet to be filled, which shows me that, hey, we have an opportunity to be able to be trading lower for the rest of the week. It takes out your higher time frame bias at this point. My higher time frame bias was, hey, we need to see if we either break to the upside or downside to know where we're moving. Are we getting a continuation, or are we getting ready to have displacement on the daily, right? So when you draw up to the daily chart and you're looking at it from the daily, you say, oh, okay, then I see where we talk about we need to get, if we start trading lower, that means we're going to have like strong displacement, possibly being able to close that new week opening gap, because that gap has to be filled. We can't leave that there. That's the trick of knowing that, hey, something, if that has to be filled and we have yet to close that, that means that by the end of the week, we could be trading, closing this whole entire new week opening gap that's right here that has yet to be filled. And we're going to mark this out. I'm glad I'm doing this today. We're going to mark this out to be able to keep an eye on this for the rest of the entire week here. This is something that we got to pay attention to. So that means that we could be trading lower for the rest of the week here. And one thing that we talked about that was in our here, I'll pull this up for us. That was in our newsletter was this. Hold on, while I open this for us. Here we go. We wanted to look at major resistance premium arrays, right? 28,895, 30,000. This marks the ceiling of May's distribution range, right? Immediate support discount arrays at 29,646. And what we wanted to look for was a tight range consolidation between 29,650 and 30,000, signaling healthy digestion. A confirmed daily close above 30,000 opens up for us to take out those relative equal highs, right? Those relative equal highs of what we had that was sitting right there, while a rejection below 29,646 targets the 28,900 discount liquidity pool. So keep those numbers in mind: 28,900, 29,646. So we're where? 29,646. What we're going to do is just put some lines right across that. 29,646. So somewhere around here, right? We're rejecting off of there. And look, y'all, this is literally in this is in the newsletter. Like, I give you the actual places of where we're going to be trading at. It helps you with your trading, and it's for free. And so it was talking about our discount zone of 28,900. 28.9. Well, where's 28.9, Jeremy? That takes us where? Below new week opening gap. We already traded below 29,646. We're below 29,646. Now that we're below 29,646, does that not mean that we're looking to be able to take out new week opening gap from where we are? That's the rest of our bias for the week. We have it in our weekly newsletter. So at the beginning of our weekly newsletter, we needed to see what? We wanted to see if we had a break to the upside, if we get past 30,000 here, if we get past this high, previous week high, if we broke above previous week high, break above previous week high, come back, test that as support. The target would have been what? What would have been the target? These relative equal highs of what we have that's resting right here. Right? Our relative equal highs. If this would have happened and broke. But guess what? That did not happen. What happened was price decided to consolidate, break down to that 29,646, come back, test that as support, and we're coming down here to take out new week opening gap, coming to this level. This is our whole entire bias for the week. Nothing else in trading matters outside of us being able to determine where the market could take us. And we now see us trading lower on today puts us in a bearish sentiment for the rest of the week until we take out new week opening gap. That's what it's showing right now. So we have to play this very smooth of being able to watch for retracements, liquidity sweeps, all in one happening. Bearish order blocks. Like, everything of what we trade within our concepts can be fed to us on a plate, off of a plate, literally, if we play it right. That means we can kill it for the rest of this week. We can kill it. There's no reason for us not to kill it. We have our initial bias that's now set in place, right? It's kind of hard to determine that bias throughout the week. where we knew we wanted to see if we was going to break above or break below, right? But having key numbers and key levels to be able to go off of, and you see these key levels get taken out, it now helps you prepare for your trading week when you're ready to trade. This information is so powerful. Having this is like this is your true cheat sheet. This is your true cheat sheet. It doesn't get no better than this. Because now you move yourself, you take your personal self from a place of gambling and guessing to actually knowing. And it's a difference when you know something is going to happen in trading versus you guessing. That's gambling. Your win percentage increases, your confidence increases, your discipline increases, your patience increases. All those things happen when you have a better understanding of where we headed and how to play the gaps when they do come. Because not every fair value gap is created equal. Not every fair value gap is created equal. You have to play them based upon higher time frame biases. It's key. If you play them based upon higher time frame biases, then that's when you will know, okay, this is why this is like this. This fair value gap is going to hold. This is going to be inversed. So we're going to be still, you know what I'm saying? Bullish here, or we're going to be bearish here. You'll be able to determine that based upon higher time frame narrative. When you don't have a higher time frame narrative, you're guessing. You're guessing at this point. And we don't like being in the playing guessing games. We like to have a clear a clear path to our goal. A clear path to our goal. So look, check this out. What I'm going to do is, oh my bad guys. Here's what I'm going to do. Let's hide this information of what we have us on the chart. Like everything of what we charted out, we're going to move that. Right? So, looking at the chart here of where we are, would you be able to identify if you had this chart, right? Looking at the chart of what we have, would you be able to identify your narrative based upon now looking at the chart? And I'm gonna move this back to electronic trading hours, closing that gap. Okay. Would you be able to determine your bias based upon looking at the chart off of the story that we told? Because my stuff that I chart out, I hold it over a week's time, right? So if you were to just look at a chart itself, would you be able to determine the story of what is being told on the chart? If so, it's game changer for you. That way you know what you're looking at. Would you be able to? Like if we went to, and not M&Q, let's go to anything. Let's go to silver. Let's take a look at silver, right? So we're looking at silver. How can we determine our bias based on silver of what we see? what is actually important of what's going to hold and what's going to fold, right? What's going to hold, what's going to fold. So with silver, if we were to do this with silver, it would look something like this. Okay. Silver put in its high here, and we're looking at this on the 15. Swing low here, we have a high here, right? If I wanted to trade silver, my entry to take this trade on silver, I would want here. Not yet. I can identify some indicators, but I still have a lot to learn. Okay, so when you talk about indicators, right? I'm gonna help you. When we talk about indicators, let's take a look at this, right? And we're gonna be using silver as our prime example. Okay. So say you have a chart, and here, let's do this. A lot of people like to use this to help them within their trading. I don't like to use it, but starting out, if you use this, this might help you in your trading. I don't want you to become dependent on it because you can, it's almost like a jet lag. This is almost like a jet lag. I don't want you to become dependent, but I also want you to be able to use it to help you in your trading as a beginner, right? Because I don't trade with this at all, period. But I want you to use this as a small strategy to help you win. It's not consistent. You don't win all the time with it. You don't win all the time with it, but I could show you trades of what happened, and you will be able to somewhat use this to help you within your trading because it helped me as a beginner. Are you still with me? 186 808 training wheels. Yes. Let me give you some training wheels to be able to help you. So we're on a higher time frame. We're on the 15-minute chart, right? And this is your intraday chart. 15-minute chart is an intraday chart. So that's kind of like when people talk about day trading, and this is where a lot of people mess up. When you are a day trader, not a swing trader or a long-term investor or whatever, when you're day trading, you're paying attention to the 15-minute time frame to determine your daily. When you go to a higher time frame, your 4-hour, first off, you got to get time frames correct. So your daily time frame, right? Anything when we go and we look at the daily chart, right? If I'm a person who trades options, or I'm a swing long-term, I'm a swing mid-term trader, right? If I'm one of those people, I'm looking at the daily chart, in order to find me an entry point to trade the daily chart, I have the 4-hour chart to use as an entry zone for the daily chart. I will use my 4-hour. If I'm trading for today, intraday, If I want to determine intraday trend, like what is our trend for today? We see the overall trend on silver because we're just taking a look at silver right now. We see the overall trend on silver is what? Bullish, right? The overall trend on silver is bullish on a 4-hour chart. We're bullish right here. We see that. We're having some bit of a retracement, but our overall trend is bullish. So if we do retrace, I'm looking at $63.23 as us remaining bullish. We could come as low as here, but if we get displacement below this level here, this last swing level here, then now this trend will become invalid and it will be then reversed to bearish. So we're bullish on the 4-hour chart. So that means that, hey, if I'm trading on the daily, look at that bullishness that we have here. We get in that retrace. If I drop down to the 4-hour, what I'm seeing, see that retrace right there? Okay, I could find me an entry based off of this to get continuation, to know if we're going to have continuation or not on this trade. Now, if I'm a person who is saying, well, I'm just trading silver for today, I don't care about holding this thing long at all, period. I just care about what's happening on moves today. Okay, so that means if I only care about what's happening on moves today, for one, I wouldn't have traded this because it's shitty price action. But if I was trading this on today and I was looking to short this, right? I would have had to short this based upon higher time frame narrative, which my higher time frame narrative says, hey, we're in a retracement area. We're retracing. And since we're retracing, I need to be determining my position based on higher time frame narrative. So I would go to the 4-hour, mark out my swing high, my swing low in the 4-hour chart, and then I can determine how I want to trade based upon that. Because if I drop down to the 15-minute, I have somewhat of a better idea as to how I want to trade. So 15-minute, if I'm looking at the 15-minute chart, I can now drop down to the 5, 3, 2, 1 to be able to find my entry points based upon whatever my narrative is at this point. So when you're looking at this and we drew out our Fibonacci, right? On the 4-hour chart, we draw out our Fibonacci on the 4-hour chart. We see that we are trading literally at the 50% zone. So that means we got a 50% retracement of that initial move from the 4-hour chart of what we wanted to see. This move, 50%. And we're hanging on to support here. So that means that I could start looking for what? If we got a 50% retracement, what could I start looking for now in my trades? Good price action looks like where you see clear defined moves to the downside, clear defined moves to the upside. That is good price action. Anything that's choppy, consolidating like this, like, let's go to the 30-minute. You see this choppiness right here? That sideways movement here. You see that sideways movement? That's shitty price action. Because you're just consolidating. Absolutely. Consolidating. So when you're consolidating, you do not want to be stuck in no trade while price is moving like this. You don't want to be stuck in that. You want clear defined moves here or clear defined moves here, like that. You want this. This is okay, right? That's okay. And this is okay. Lower highs, lower lows, higher highs and higher lows. That's okay. This is good price action, right? This is Joe Biden markets. Just being real. Back in Joe Biden markets, great price action, right? Less consolidation, great price action, higher time frame narratives, great price action, right? No consolidation. If you go back and back test. Trump markets, you're getting a lot of consolidation, but it's back with a lot of volatility too as well. But the consolidation, you have to be disciplined enough to not trade that. If not, you're going to get yourself killed, right? Just like how we did when we talked about let's go to MES. When we talked about MES and we was looking at MES on the daily. Remember when I told y'all February was my toughest month? Oh, I'm sorry. February was one of my toughest months in trading. Why? Look at this. This is shitty price action here from December, from when Trump came into the market, all that tariff talk. Like, if you lived in this era, if you traded in this era here, you're going to be able to tell your kids that you survived. This is what made you either love trading or hate trading. It wasn't until we got a defined movement to the downside or to the upside to where it was clear. But all this terror talk once Trump entered into him winning the election, entering into the White House. Look at this. It's ugly. You can't tell me that is beautiful for a trader to want to trade. No, that's difficult to trade. That's very difficult. So what did we do when we had this going on? You know what was balling and where I made a lot of money? Gold, right? So when you go and you look at gold during that time, what was gold doing? Trending up. All throughout of February, gold was trending up. Made some money. So anytime the indices is stuck into consolidation like that, you got to be able to pivot into precious metals. Pivot into what happened in April that made it bullish. What happened in April was when we went to court, right? If we go back to MES, this is why you got to pay attention to macro news, right? Macro news. So in April, when we went to court, Trump went to court or whatever, they had to determine in court that those tariffs that were put in place was not were not good. Basically, they was telling Trump, hey, you can't do that. Yeah, you were screaming tariffs for people, everybody back here, da 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 da, but you're not going to do that. Once they ruled that decision of him not being able to do that, boom, the market took off. Once the market took off, hey, we created new all-time highs on ES. We created new all-time highs on MNQ. So to me, paying attention to those important dates of things that happen that are true significance of where the market reacts, you want to be able to pay attention to those, because the way the market reacts, it also can determine how you react as an investor and as a trader. So if you were a person who were investing during this time frame, guess what? That means that anything of what you would have bought that was within the S&P 500, right? If you would have bought low and held to all-time highs, you would have been balling in your portfolio, right? Like how a lot of us are now. We're balling in our portfolios because of that move. If you are a person who trades, you like to see moves that are like this instead of moves that are like this. You want to see that. So when we drop down to lower time frame narratives to find our entry off of a 15-minute, I hate when I do that. Off of a 15-minute, I don't use this strategy anymore, but I'm going to give it to you to be able to just practice with and back test. So that would have been a good long-term entry point. Absolutely. That's why I was like, it's a difference between long-term investing and being a trader. You got to separate the mindset. You can apply the same type of context to your long-term investments, but your moves won't be as quick as you do in the day, right? They play out over time for a long period of time, especially if you're a person who trades on the weekly for leap options or the daily, right? So here goes the strategy of what you can use here. If how we trade, excuse me, because I don't use moving averages at all, period, right? In my trading, I don't use moving averages, but as a beginner, these moving averages can serve you as as training wheels to help you determine your trades. So this strategy is called the 9 and 21 EMA cross. 9 and 21 EMA cross. Now, this does not win 100% of the time. And it does not. Some people, what I find a lot of rookies, what happens with them, but a lot of beginner traders, they start depending on these moving averages, and it goes away from them being able to tell the true narrative of what's happening within the market. I want to teach you how to read price action, not to depend on indicators, right? Indicators are good for people who are first stepping in and they need some help to kind of formulate what type of trading that they want to do because they can't read price action very well. So moving averages help you with being able to understand understand price action. So this blue line is a 9-day 21 moving a 9-day moving average. The green line is the 21-day moving average, right? So that means over the past 21 days, this moving average is accumulating price over the past 21 days. This 9-day is accumulating price over a 9-day moving average. Okay. So when you use this and you're a person who is using this, say you want to use this for extra confirmation within your trading, you can, right? You can. But me, I don't like to have all this stuff on my chart. So you would never see it on mine. But when I first started trading, I did use this, and I used this strategy. So with this strategy, every time you see the 9-day and the 21-day cross below, you want to pay attention to it. When you see the 9-day and 21-day like this, you see it crossed here. We're down here at the bottom. You see it crossed here, right? But price still continued on down. So that means that every time it crosses does not mean that you're going to be bullish If your 9-day crosses the 21-day, just because it crossed the 21-day doesn't mean it's going to be overall bullish. You still need more of a narrative to be able to help you take that trade. Most people use this strategy, and what they do every time they see a cross happens, if they see the 9-day cross over the 21-day to the downside, they automatically enter into shorts, but price reverses on them in the midst of that, right? And because they don't understand higher time frame narrative. When they see it cross to the downside, like here, let's go over a little bit more. Like here, here's an example. Pull this over to here. You get the cross here, right? Price is bearish, but it immediately runs back to the upside, pulls back down, and start continuing higher, giving you multiple crosses where you get a cross here and you got a cross there. Where both of these crosses are, here I'll be able to show it to you. You got a cross there. And you got another cross here. Mind you, we're on a 5-minute. Us being on this 5-minute chart, that's a lot of noise to me still. Where to have you entering into trades, exiting out of trades, entering into trades, exiting out of trades very quickly, right? So if I was a person who was using this, I just want you to use the crosses to be able to determine what happens with price action. So when you're sitting at home and you're tape reading and you're just watching the market, not taking any trades, 0 trades, don't take any trades, just watch the market. When you watch the market, slap on 9-day and 21-day EMAs, moving averages, and just watch them. Just watch them. Watch how they cross. Look at the higher time frame narrative, and then you'll be able to learn how to use these moving averages. I had nobody teach me that and tell me that at all, period. I was a person who was taking trades solely based off of the cross. Soon I saw a cross happen, hey, I'm entering in. Without even giving a trade time to even play itself out. Because I was so anxious. The self-sufficient route is, I'm gonna tell you, this is the longest route that'll be the longest route you ever took. Because what the expertise of what I have in the market, this is years, right? I've been trading for years, right? So years of knowledge all compiled in trying to do this. I took every route. I'm trying to give you the shortcuts so that you don't have to go through what it was or what I went through, because I did not have a mentor to be able to help me at all periods. So the strategies that I use to be able to help give me an idea as to what I'm seeing, I use these moving averages to be able to help me. One, not to take trades with. I had to learn that. I don't want to take trades with them. Although I could, but they help determine the trend factor for me. And I can use them to my advantage as I'm trading, but I have to learn price action. Me learning price action shows me that, hey, looking at ES on a 5-minute chart, why did price move all the way down like this today? Well, we're in a triple top, right? Got a top here, top here, top here, shoulder here. Price breaks down in a triple top, right? That means that if I was using my moving averages, once we got this displacement candle here, and price broke down fully here, now I can use the concepts of what's being taught to me to be able to identify how I want to play this. Not me jumping into shorts, because look, you would have jumped into shorts and this is what it would have created, so much fear. The market is now closed. Congratulations to how we performed today in the market. Congratulations if you were able to learn something on today, right? Got to give a shout out to you. And congratulations to those who did not risk capital and you was able to preserve your capital on today, being ready to trade for tomorrow. So look, here we go. Once we break down here with this move to the downside, right? Because we see it on ES. This is the same thing of what we traded today, right? You see this breakdown here. You got these moving averages that crossed here, right? So now that they crossed, this means that, hey, this is an indicator to tell me that we are bearish for the time being. Because we got a 9 and 21 day cross to the downside, we are bearish for the time being. What I want to see is, do we break structure of these moving averages? And what I mean by that is, do they turn back up and go bullish? If so, I don't take no short there. I look for longs. These moving averages help determines your the type of trades you're going to take. So what we saw is we get across here. You get this cross that happened, right? We're now bearish because of this movement here, this price action movement here, right? So we're now bearish. You don't FOMO into this move. This is just an indicator that, hey, we're bearish for the time being. Now, what you're going to use to your advantage is our concepts of what? Fair value gap. Okay, we created a fair value gap. Here, I'll mark it out. We created a fair value gap here. This will determine if I take the trade or not. Look at the rejections of how well this respected this area. Rejection, 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 rejection. It did not inverse this fair value gap. It did not inverse this fair value gap. Now that this fair value gap did not inverse, look at the sideways movement. Even your moving averages is moving sideways in consolidation. And it's respecting this area in this zone here. Now that this area in this zone is being highly respected, and you see the continuation of what could happen on the downside, you want that momentum. Same thing of like we talked about on M and Q. What did I say that I needed before I took the trade? I didn't want to trade the consolidation of us respecting that gap. I said, hey man, I just got to see some volumes get ready to step in with a nice displacement, and maybe I could enter in then. So I have 2 entries at my disposal based upon our fair value gaps. You have this one here where you see all the rejection of what's happening. All this rejection here. And you also have another one. Say for instance, you miss this and you say, you know what? I don't want to enter into here. I want to see the trade break down first, and then I'll be able to catch another entry. Well, where's my other entry at? Here. This is where your second entry would be. If you missed out on the first entry and you didn't want to do anything because of the consolidation, you wait for price to break down, come back, tap into this fair value gap that's here, then you take it on down to the downside, right? Because of your your higher time frame narrative. If you have no higher time frame narrative, of course, these fair value gaps are invalid at that point. And that's why a lot of traders don't know how to trade these concepts, because they don't have a higher time frame narrative. You wait on the retest. Absolutely right. Is there an indicator that automatically marks out 12 a.m., previous day high, previous day low, liquidity, and fair value gaps? No. You would really truly probably have to have 1,000 of them on your page, one for all. Here's what you can use for 12 a.m. because 12 a.m. is pretty much simple, right? And this is what I do. I get a trend line. 12 a.m. is simple. You get a trend line, right? And you find where 12 a.m. is based upon the times that's here at the bottom of your chart. You find 12 a.m. and you take it and you just drag it all the way across like we did here. Right? Drag it all the way across to the time frame of what you'll be trading within the day. Right? Drag it all the way across, and that is your 12 a.m. That is your New York midnight open. And you see if price action is above or below. Because the thing of what you want to do is not have so much crap on your chart. I hate a chart that has so much stuff on it. Right? Like, this is us drawing on the chart now because we're learning something. But I hate a chart that has so much crap that is sitting on it, because it messes up your visioning. Because you become too dependent on what you see marked out, and it makes trading complicated and not simple. You only want to mark out the most simplest things for that day. For your zones of what you're in, right? I would say you may be able to find something. Let's see real quick. You may be able to find something for previous day low, previous day high. Because mine is marked out for the entire week. Like, I mark it and I draw it all the way out for the entire week. I find the low of the day and I take a trend line and I draw it all the way out for the whole day, all the way for that week, previous day high, previous week high, and my previous month high, my previous month low. For all of them, I draw them out a long line and I color code them for that week. And now that I have that, it keeps me from having to throw that up on the screen each and every time. I just drag them out every morning to the time frame of me trading. I pull it out. So that way you could determine what it is, because all it is just the end of the week. So when Friday happened, that's how you start tailoring your chart on a Friday. Why? Because market is closed on Saturday. Or you could wake up on a Saturday morning, right? And you could go and see, okay, where's the high for the week? Okay, there's the high for the week. I could draw that out. Boom. Where's the high of the particular day? Okay, this is where we hit the high of the day for New York and we start trading lower. Boom. Where's our low for the day? Here's where we went as low. This is going to change right at the end of the day at 4 o'clock. Once 4 o'clock hit, regular trading hours, this is where I will move this to regular trading hours. Regular trading hours, 4 o'clock hit, boom, marked out for the day. And you just have those marked out. Previous day low, previous day high, 12 a.m., previous week high, and you just play off of those levels. These moving averages, you really don't need that, but they're good to give you an overall idea as to what you want to see as far as the trend for that day. Oh, we're breaking down, we're in a bearish trend. Oh, we're moving up, we're in a uptrend. That'll help you determine that. And as you get more advanced, you will not need this at all, period. You'll just be able to read price action and be able to see where gaps are, where gaps get filled, where holes are within that, right? And what I talk about when I say holes, I'm talking about we don't have it on ES, but we do have it on the Qs. I showed it to us on the Qs. Here it is on the Qs. Here's the hole, right? That hole will be new week opening gap. So that's a hole right there based on regular trading hours. So we call this a RTH gap, right? New week opening gap. RTH gap. So regular trading hours, new week opening gap. Regular trading hours are from 9:30 to 4, right? Electronic trading hours are anything that's after New York session. So anytime that you see me come here and I switch my sessions from regular trading hours to electronic trading hours, my electronic trading hours you will see price movement of what happened within the futures market of this. But if I go regular trading hours and take that off, you will see a gap that's there. And this is why I said our overall our overall bias based upon our macro newsletter that I send out every week, 29,650 and 30,000. If we hit above 30,000, we could look for 30,300 and relative equal highs. If we hit below 29,650, we know that, hey, we could be trading shorter down to what? New week opening gap, regular trading hours. So that means that the rest of the week we could look for possible shorts for the next couple of days. We're bearish at this point. So I don't want to drop too much on you, but if you can find something, whatever it is of what you find, because there's so much that's out there of what you could use, whatever it is of what you find, make sure that you have a clean chart. Make sure you have a clean chart. See, here's that gap right there. You see that gap? That's an important gap. So whatever you find, make sure that it is clear on your screen. So when you're trading, none of this crap is preventing you to do something that you don't want to do, all because it may be glitz and glamour and look pretty on the chart. You don't want to depend on that. You just need these key things and focus on what is happening within that and price action. Price action. One of the things that I also say, add volume. Find that volume indicator. Am I trading tomorrow? What's tomorrow? Thursday? Wednesday. Yes, I will be trading tomorrow, 9 a.m. Yes, that indicator is called 9/21 EMA cross. I only advise that you tape read and just watch it and look for those entry points of how we talked about. Right. Just use those lines, mark them out, use them, and then get rid of the indicator because you won't need it, right? You just want to be able to use them, and we're gonna read price action throughout the day to determine if we trade or not. Okay, the market is now closed for sure. It's 4:15. That was the last candle that printed right at 4:15. So it is done, and now I'm done because regular trading hours are over completely. So hopefully, when you do some homework tonight and you back test, you'll back test looking for those things using the EMA, the 9 and 21 day EMA. You can use that. But when you use it, just tape read with it. That means back test this thing, right? Like this. I'm talking about back test for the day, the entire day, all the way back till 9 o'clock this morning, right? Mm, Where we at? Here, let me go to the 15-minute and do it on the 15. Here we go. So go all the way back to like 9:30 a.m. And when you go back to 9:30 a.m. and you hit replay and it start replaying, you want to turn this down, the speed down to a lower speed, right? And you just sit and you watch your candles print. And as they print, then now you determine, you're just back testing your strategy at this point. You're replaying the market and you're back testing your strategy to see, hey, is this something that can work? Can I use this? And if you want to try to trade it, then paper trade it, right? But don't use your live capital. You just want to practice seeing if you can be able to read price action. We call this tape reading, where you just sit here and just watch it. See what it's doing, watch it. I know the 3 candle setup. I like to see you get there. What do you mean when you say you like to see me get there? Oh, tomorrow, can you walk us through how you find fair value gap and liquidity? Yes. That's what we will look at tomorrow. So tomorrow we'll look at how to identify uh levels of liquidity. How do I know where my TP is going to hit at exactly, right? Based upon that of liquidity. And we will also do it based upon efficiency and inefficiency of FVGs, right? So that's going to be very important. That is something that's actually tomorrow. So tomorrow at 9 o'clock, that's what we'll start. We'll start there, and at 9 a.m. we'll go through our pre-market analysis real quick. From 9 to 9:15, we'll do pre-market analysis. After 9:15, from 9:15 to 9:30, we'll start breaking up uh within that session of understanding those things. We'll go over liquidity possibly first, more than likely first, and then we'll finish at the end of the session with fair value gaps, right? That way that'll be able to help us. We'll be able to kill two birds with one stone within that same session while we're trading live. So we'll be trading live too, being able to do that. So of course, no problem. All right, so if that wraps it up for us, how y'all feel? Do you feel as though you're getting better being able to understand trading, understanding how this thing works? How can you conquer this beast? You can definitely conquer this beast here. All right, so with that being said, I appreciate you all time and effort, and I'll see you on the next one.